Hello, and welcome back to the Finance Hub, your go-to channel for all things finance and investment. Today, we're diving into a topic that every investor needs to understand: taxes on investment returns in Kenya. If you've been making investments or are thinking of getting started, it's crucial to know how different asset classes are taxed so you can maximize your returns and plan effectively. Let's get into it. First, let's address the basics. In Kenya, returns on your investments don't just flow straight into your pocket. They are subject to withholding tax, a type of tax that's deducted directly from your earnings before you even receive them. The rates vary depending on the asset class you're investing in. Let's break it down. First up are money market funds, or MMFs. If you're investing in an MMF, you'll need to account for a 15% withholding tax on the interest you earn. MMFs are low risk and offer liquidity, but that tax can take a bite out of your returns. So, when calculating your expected earnings, always remember to factor in that 15% deduction. Next, let's talk about fixed coupon bonds. These are a bit more complex. The withholding tax rate for fixed coupon bonds ranges from 10% to 15%, depending on the tenor, which is the length of time until the bond matures. Generally, the longer the tenor, the higher the withholding tax. Now, for those who have invested in SACCOs, the good news is that dividends from your SACCO investments are taxed at a lower rate, just 5% withholding tax. This makes SACCOs an attractive option if you're looking for an investment that allows you to keep more of your earnings. Similarly, if you receive rebates from your SACCO, these are also subject to a 5% withholding tax. Rebates are essentially returns on your SACCO contributions, and while they are lower risk, that tax will still apply. Investors in the stock market should note that dividends from Kenyan-listed companies are also taxed at 5% withholding tax. Whether you're holding blue-chip stocks or looking at smaller companies, that tax is consistent across the board. Keep this in mind when calculating the returns on your portfolio. Finally, not all investments are taxed. Infrastructure bonds and Eurobonds are completely tax-free, making them very attractive for investors looking to maximize their returns without worrying about taxes eating into their profits. Infrastructure bonds, in particular, are popular because they offer stable returns and support national development projects. To sum it all up, different asset classes in Kenya are taxed at varying rates. From money market funds taxed at 15% to SACCO dividends and stock dividends at 5%, understanding how these rates apply to your investments can help you strategize more effectively. And remember, tax-free options like infrastructure bonds and Eurobonds are great ways to maximize your earnings while avoiding taxes altogether. Thank you for tuning into this episode of the Finance Hub. Don't forget to like, subscribe, and hit the notification bell so you never miss out on crucial financial tips that can help you grow your wealth. In our next episode, we'll be diving into how you can build a diversified portfolio using these asset classes while keeping tax efficiency in mind. Until then, happy investing